Hi, and welcome to the Real Estate Nerds podcast. I'm your host, Scott Royal Smith. I am the owner of Royal Legal Solutions. I'm a longtime real estate investor and attorney. We help people all over the country with different types of best practices when it comes to asset protection, estate planning, and tax strategies. And I am uniquely with the pleasure with a good friend of mine, Michael, who we've actually been in contact for an association with each other through Bigger Pockets and other mediums for quite some time now. He's going to join us with their show. He's going to talk to us about two huge things, guys. Like, this is an amazing piece of insight that he's going to be able to give you today. Because of his experience and tax experience, he actually gets to see people's returns. And he actually can tell you, like, who is really making money, right? How do the people that are making the most money, how are they actually doing it? And the second thing he's going to be able to talk to us about is, of course, the one thing that we're super excited about, which is always saving money on taxes. And I'll be able to ask him some questions for you today of some of the things that you guys have been talking to me about, and some questions that I might have as lingering pieces. So, Michael, thank you so much for coming on to the podcast here today that we're live streaming to our tax legal and asset protection secrets for real estate investors private Facebook group. And for everybody who wants a sneak peek, that's the group is the way to get it. Otherwise, you're watching this podcast on iTunes or Stitcher or on YouTube. Michael, what do you think is important for the audience to know about you and your background to kind of get a feel for your level of expertise and knowledge and talking about the topics we're going to discuss today?
I'm not sure, Scott, if that's very important to know about my background. It does not help people make money except when they work with me. But I've been doing that for over 20 years, and I'm a tax accountant. In the real estate community, people know me as black belt in real estate taxation because I'm not on video right now, but normally when I speak, I wear my martial arts uniform and black belt. And black belt is because 20 years of working in taxation exclusively for real estate people. So all of our clients are investors, and I have seen everything, the good, the bad, and the ugly.
That's awesome, Michael. So can you tell us a little bit about what is who are the people that are really making money with the real estate investing and just in that one asset class of real estate investing? Who are those people that are really making money out there?
Well, that's a great question. The easiest way to answer it is I can tell you who is not making a lot of money. Usually it's people who post their checks on Facebook and brag about how much they made. Like, truth is, a lot of these people really are not making money. And reason for that is most of those people are in wholesaling and in flipping. And not many people will admit to that, but I will because I'm doing their taxes and I know the real story is 95% of first-time flippers lose money, not make money. It's actually a business which is very hard to make profitable. It definitely is an opportunity. I work with a lot of established flippers who make a whole lot of money from flipping, but that is probably the single hardest place to go. Okay, the most risk and the most opportunity to lose money, also pretty good opportunity to make, but it's relatively rare. If we're talking about who makes money, here is a thing. There is a very old Paul Simon song, 50 Ways to Leave Your Lover. So there are 50 ways to make money in real estate, or maybe more. And for every one of those, I know people who made a fortune, and I know people who lost a fortune. So everyone has a way to make money. You cannot say like who really makes the most, because it also changes with market and with situation. Example is a lot of short-term rental people were very happy with themselves up until right now when coronavirus hit it and all the cancellations and then suddenly all the vacancies. And today it doesn't look as exciting as it looked half a year ago. Okay, so, but there are some more consistent things. So if we're looking at where you can make money more reliably, more consistently, is okay. Let's start with rentals, I guess. So Being a landlord traditionally has been a good way to make money, and economy of scale works. So people with bigger portfolios are doing better in general, and multifamily properties are generally doing better, and the bigger the better as a rule of thumb. But of course, it's a rule of thumb. When I do presentations, I ask my audience, okay, can everybody, show me your thumbs? And then everybody raises thumbs, and I think, see, everybody's thumb is different, So when you say rule of thumb, whose thumb are we talking about? But still, like most thumbs will point out to multifamily landlords doing relatively well. Private lenders are always doing well because they are almost guaranteed to get paid, and their risk is very modest. So if you have big capital and not a whole lot of time to do that, then private lending would be a good thing to do. And everything else, like I said, could make money. We have a very interesting argument, if you want to go into that. It's about owner financing, which is hugely popular direction right now. You want to talk about that, Scott?
Yeah,
What's your
I heard
take?
like a lot of really great, a lot of people that say a lot of great stories about doing wraps and doing owner financing inside of a wrap. Have you worked with people that are doing that?
Of course, yes. The market is generally shifting towards that. I know a lot of people who are converting their rentals into owner financed property, but I think there is that big piece of misunderstanding that follows that strategy, something that I struggle to deliver in my messages. What we talk about is this. Let's say you have a rental property right now, and that property is worth 200. Now, 10 years from now, it will be worth 400 or whatever your guess is, but it will be worth more. If you owner finance it for 10 years right now, you are going to have real good cash flow for 10 years. I'm not arguing with that. But after 10 years, you are going to have nothing. That thing is gone. You don't have an asset. You don't have a loan. You have nothing. You had 10 years of cash flow. And when people argue about cash flow and showing the numbers, yeah, the numbers are right. You can get exciting cash flow from owner financing. But what you are forgetting, when I'm saying you, like, not you, Scott. Okay, I'm talking like what people are forgetting. Investors, when they are moving into that, they are giving up appreciation. Appreciation of something that you don't have to work for. That's a portfolio that you had in your hands that kept growing, that could provide generational wealth for your family, and you are giving it up. You won't have it. What you have you have determined term cash flow, which is great. I'm not against it, but I need to make sure that everybody who does that understands the trade-off. You are trading off current cash flow for future appreciation of the property. And I would not say that it's a no-brainer that one is better than the other. It depends on where you are financially, what are your long-term goals, what is your whole business about, and it's case by case. That's why, like, when we work with clients, I would never tell somebody, do that or don't do that. We will examine that. Does it work good for you? For some people, one thing is better. For others, the other one is better. Just like in what you do, like on legal side, like, do you have a can I buy from you for $4.99? A package that tells me everything I need to know for asset protection. That works for everybody. Yes. So,
No, and in fact, like I think that's really like when you hear people talk about like, oh, that this thing is absolutely always better than that other thing in all circumstances. Usually, what it means is that a person that's telling you that just doesn't have a sophisticated understanding. Because almost everything is right for somebody in the right circumstance, right? And so it's important to understand the nuances of it, like you've just detailed out here. And so I was
either not enough understanding, or to me, like not having experience with the other side, maybe. Because if this is the only thing you tried and it works for you, then the impression is, yeah, that's the only thing that works. Well, not necessarily. Other people are doing other things and as successfully or maybe better than what you have right now.
Yeah, I think that's right. And I think it's important to to be aware of like also the biases that come up with this, right? So sometimes people were successful in one thing, but they were successful despite actually not being very good at it, right? Because overall market trends went up
Yes,
or other things, right? So
absolutely. That is true too.
it's important to be cognizant of a lot of these different facets that come into it. I was wondering about, where do you see? I've seen a couple of different guys like run some different models, right? So I met a guy about a year ago. We had a dinner with like this whole Go Abundance group, which is a group I belong to, and he had a net worth of about $750 million in apartment complexes, and and then people are like, well, how did you accumulate that level of wealth in apartment complexes? And I went up there and I looked at his car, and it was, just kind of like a junker of a car, and and I was like, God, this is such a fascinating, thing. It's like an old Mercedes diesel. It's like a nice car, right? I mean, like it was clean, it was good or whatever. But I was like, this is not the car of a man that's worth $750 million in my mind, right? And he's like, well, I bought my first apartment complex when I turned 18, and all I did was I kept buying apartment complexes and doing other deals and stuff like that on the side. But any money I would make, I would just buy more apartment complexes, and I never sold them. I just always held on to them for forever. And then when I would have more cash and appreciation in some apartment complexes, I would strip out the equity and I'd buy more apartment complexes with it. And I was like, man, this is fascinating because like you're worth a ton of money. And I'm wondering like, it's like that seems to be like a really surefire way to build like a huge amount of assets in that kind of space. But at the same time, I'm like, did you really like enjoy creating the money? You know what I mean? Like there seems to be some like ebb and flow here about like how much money do you use in one thing versus how much you just focus on total net worth. That might be like a more advanced kind of discussion about what you do when you already have a ton of money. But I was wondering if you would follow and recommend for people that same type of line of thinking of saying, hey, like apartment complexes are a really great place because you have great cash flow for people. You're going to have your people have to have a place to live, and it's a great place to just park money and leave it, and you'll have that asset for forever, as opposed to doing like a wrap strategy where you'll lose the asset. You really should be buying assets and planning on holding on to them for the long term if you're really focused on long term stable up and to the right kind of net worth gains in your life.
Your comment, like your story, circles back to what we are talking about a little earlier, that there is no one size fits all. Because when we are talking about that, you said, what is the line of would I recommend line of thinking? I would not recommend to my clients line of thinking necessarily, because everybody is pretty stuck with their way of thinking. It's very hard. Ask all the female part of our audience how successful they were changing their significant others' mentality, and vice versa, right? So we have our ways of thinking, and your way of thinking is no better or worse than mine. It's just, that works for you. Yours works for you, mine works for me. It's when it does not work. Then we can say, like, if a client comes to me and says, hey, this is what I'm doing, it's not working, then we can brainstorm and saying is, okay, maybe we just need to look at that differently. But if somebody comes and says it's working for me, I'm not going to tell the guy, oh, no, you have to change that. It's working for you, great. And my experience has been that almost everything works for somebody. We talked about apartment complexes. Absolutely works great. At the same time, we have lots of horror stories about people who lost money in bad syndications, both as passive investors and syndicators themselves. You have those stories, I have those stories. They are not pretty. And if you focus on those, you can say it's like syndications suck. Well, they do suck for some people who did not pull them, but majority, like if we look at statistics, they generally work well. Now, but same can be said about other things. We have clients with single-family residences portfolios, like owning hundreds of single-family homes, doing exceptionally well, and they would never consider anything else because it works great. There is always demand for single family homes as well, just as there is demand for apartments. Then we have people who do commercial buildings. Again, that depends. You know, if you are investing in commercial buildings, I'm based in Houston, Texas. So like here in Houston, Texas, we have medical center. Like if anything related to medical center, the biggest like medical center in the country, any commercial building related to that, you are pretty much set. You know, if you were trying to do office buildings around different part in Houston, which is NASA area, well, when NASA was doing good, that place was doing good. When NASA business took a hit, you know, that area was not doing well. So, but that applied both, you know, residential or commercial in those areas. Then you start looking again, we mentioned flipping. Some flippers are doing exceptionally well. Private lenders can do well or not so well, depending on what they are doing. You are looking at owner financing. Again, a lot of people who I know and who we work with have tremendous cash flow from owner financing, would not do anything else. And as far as that guy whose story you were telling, when he says that, yeah, he was very frugal, that, you know, millionaire next door style, you know, when all of them wear, you know, cheap clothes and drive cheap cars. Yeah, absolutely. I know people like that. I also know extremely successful real estate people who have flashy lifestyle. You know, they look at, that guy is no longer active in Houston, but one of the big Houston investors, he was a in apartment complex guy, and originally the guy, that was actually an interesting story we might share here, because originally the guy was a postal carrier. That was his career, and that he was going through the neighborhood, he was having lunches at a restaurant, and the owners of the restaurants were real estate investors. So he was picking their brain while on lunches on his route, and gradually, like pretty soon actually, he overtook them, became a huge investor, and then when he had those annual functions in Houston in his place, like the guy had a 3-story mansion and fancy cars, which he enjoyed buying and collecting, and his garage apartment, like in the back there was garage apartment. His garage apartment was bigger than the house I live in. And so the guy was not like bashful at all about his lifestyle. He made good money. He spent money pretty good too. So both ways work. You know, it depends. Like if you want to enjoy the fruits of your labor, that's the point, kind of, right? That's what you're working for. For some people, it's fancy house and fancy cars and big parties. For some people, it's exotic vacations. And some people prefer to keep low profile and not spend money. And they're pretty happy about that. So it depends what is your cup of tea.
Well, I was wondering about that because I've been talking to a lot of real estate investors about it, and they were saying, "Hey, Scott, like, what are the ways that you can see with real estate investing being part of like an overall portfolio that has pretty like consistent conservative gains, but are pretty safe over time?" And so there were people talking about like, hey, you know, should I buy stocks and start doing covered call strategies, and maybe layer that in with some you know, real estate investments that are relatively conservative, to be able to, you know, have conservative cash flow, conservative appreciation, but pretty safe. And I was wondering if that was something that you've picked up from looking at all the different types of tax returns for people that are looking for that, you know, like pretty conservative types of returns, but also that are very safe and that don't require them to have a lot of time to manage those assets or investments.
I also would not have a clean answer to that because different people go about their investment portfolios very differently. We have people who traditionally were corporate W-2 people, or some of them still have good paying W-2 jobs, and they are used to investing in the market. And of course, like with the current situation, that might change for some of them. But people who are used to invest in traditional securities, in stock market, in mutual funds, bonds, and all of that stuff. And for a disclosure, I used to be a financial planner at some point, so used to be involved in that. And yes, that's still a good way to make money. And a lot of these people accumulated very significant wealth in their retirement accounts or in their regular taxable accounts through non-real estate investments. Nothing is wrong with them unless you talk to somebody who is new in real estate, like spent 2 years in real estate, made great money flipping, and believes that is the only thing that works and nothing else. That's not true, guys. Everything works. People can make money in trading stocks. People can make money in currency trading. People can make money even in cryptocurrency, which requires skill and luck, but people do make money in cryptocurrency. And of course, real estate. And when somebody says my way is the only way, I don't argue, but I also know otherwise because I have clients who made money otherwise. And allocation is completely different. Like trying to see if we are trying to tell, okay, the good mix is to have 25% in the stock market, 25 in commercial real estate, 25 in foreign stocks. Like people do stuff like that. I don't. Like I have seen different combinations and all of them perform differently at different market cycles. So, but one thing is clear, diversification is good thing. Like people who invest, who do everything the same way, like everything they do is identical, it works very good while that particular asset class or that particular area or whatever else, like their specialty is, it's very easy to perform exceptionally well during the good times. But then when the stuff hits the fan, if that thing happened to be positioned in the wrong place, then you take such a dramatic hit that a lot of people do not recover. And if you never experienced that, like I said, I'm in the business for 20 years, have seen all kinds of market cycles, and have seen people hitting hard times and being knocked out of the business when they were extremely doing very, very well right before 2008, for example. And I know a lot of people who after that returned to corporate jobs, even though before that they thought they were set for life, whether it's real estate or something else. One of my former bosses was in that situation. The guy was, he actually quit his corporate job. I quit it first and went into accounting, and then a couple years later, my former boss, I kept in touch with my coworkers. My former boss quit his corporate job because he made so much money in the stock market that he decided he would never need to work anymore. And then I was going to meet with him for lunch one time and contacted him, and we arranged where we meet, and it was like 15 years ago or so. And the guy said that, well, just I asked him what is his cell phone number, so like if something goes wrong, like we can touch. And he did not have cell phone number. And when we met and I inquired what's the deal, he said, well, he couldn't afford cell phone at the moment. So
Wow.
things like that happen. That's a real story, like a real nice guy who I know and who I'm friends with, but he went from thinking he will never need to work again to not being able to pay for a cell phone.
Wow. Well, Michael, I like to wrap every podcast episode here with like a lesson learned. And that's really like the biggest piece that you just said is really my big takeaway from today's podcast, which is, that everything can really work sometimes for some people, and you have to really think deeply and about like what's going to work really well for you, as a real estate investor, as somebody that's looking to build their portfolio and maybe even broader than real estate. and realize that, that it's really important to think about being conservative so you don't end up going from wealthy to not being able to afford a cell phone. Because, what we've seen time and time again, it's not, it's not the high or the low. It's that really gets people. It's when they have to change between the two that really is super painful in life. And if we can keep these things stable, keep moving up and to the right, then overall that's where life seems to be the best for people. And we got to avoid these big whipsaws going up and down so we don't end up like your buddy there with no cell phone. And I just wondering, Michael, if you were going to leave everybody today with like a lesson learned from the podcast and from them to take away, what would you want to underline or highlight for them as a takeaway?
What you just said, I almost completely agree with, except for one word that you used, conservative, because I don't necessarily advocate for conservative. That's another thing that people have different opinions on, and I would not tell my clients to be more conservative or less conservative than he or she is. Everybody has different stomach for that, and there is no wrong or right thing about that. So if we talk about one take away from what we discussed, is my experience of having watched hundreds, probably actually thousands of investors over 20 years, is that there is no right or wrong way in real estate. Real estate is very diverse, has very different types of opportunities, and you can always find what works for you, which is an encouraging thing for people who tried something and it did not work. Maybe this thing does not work for you today, but there is so many other things in real estate that you can try, that there is thing where everybody can find a niche and find a way to succeed, make money, make their lifestyle better, and accumulate wealth and leave it for your kids and for your loved ones.
It's a beautiful message, Michael. Thanks for coming on the show and sharing that with us. And I'm wondering if you tell us about, for anybody out there that wants to connect with you, learn more about you, maybe hire you, what's the best way for them to get in touch with you?
Oh, thanks, Scott, for asking. Of course, and my firm is called REI Tax Firm. REI is Real Estate Investor. REI Tax Firm, and that is easy to connect because all we do is we work with real estate investor. Every single client of ours is in real estate, and what we do is we provide comprehensive high-end services for professional investors, which include tax planning, tax preparation, bookkeeping help, business advisory. So all of that combined. So basically everything that relates to your financial success and clean numbers related to your business. So you can find us at reitaxfirm.com. I'm pretty sure your video will have links, and we would be happy to help you if your business is growing, and we can accelerate that growth for you.
Awesome, Michael. Thank you so much for joining us. Everybody go check out the REI Tax Firm and find out some of the awesome information that Michael has out there for you. Go check it out right here, right now, and get in touch with them. They have some great resources, and Michael is a wealth of knowledge. I can attest to that for you. Thank you so much for joining us on this episode of the Real Estate Nerds Podcast. Of course, I'm your host, Scott Royal Smith. This is our installment of our podcast today. It's live streaming out to our Facebook group, which is the Tax, Legal, and Asset Protection Secrets for Real Estate Investors Facebook group. It's a mouthful, but just search it. You'll be able to grab it. Everything's live streamed there. And if you're watching this on the podcast or on YouTube, it's podcast is on iTunes and Stitcher for that. So thanks, guys, for joining in. We will be with you again here soon.